All right, first episode, Hymns Weekly. Welcome, everybody. We got a slightly different cast here. Roy, we got Manuel, we got Will. I tried to find like the best hymns content creators that I could find, and
And you're stuck with me. Sorry. Sometimes that happens. But at least you got these two guys. So Will and Manuel, thank you guys for being here.
yeah, it's gonna be fun. So, gents, I mean, this is the first time that we're speaking. Like I was saying backstage, Roy and myself only entered hymns. Like I entered in August, and then Roy, I think, has been in the company for a couple weeks. So we're invested in like the mid-teens. Really interesting stuff. We're both still building out our positions higher and higher. But maybe we can start just high level. You guys, what's your story with hymns? Maybe as a percentage of your portfolio, like how big of an allocation is that? And when did you first start buying?
Manuel, you want to go first?
Yeah, sure. So I discovered IMS literally the day it announced it was going public through the merger with Oak Tree Capital SPAC. Because on that time, like I'm 22, so I started to invest as soon as I turned 18, but it was kind of a bit during the SPAC mania. Like everyone was crazy about SPACs, me included, obviously. So I was like, oh, Teladoc, Livongo, they're skyrocketing. I need to look at this telehealth company as well. And I bought a few shares. And on that time, like everything that Cathy Wood from ARK Invest like touched, everything would like skyrocket in the day after, not like today. It's like completely the inverse. And then Cathy Wood bought a few shares, and HIMS went from $10 to $18 in like 2 or 3 days. And I was like, okay, I'll take that. And I sold. But I kept like doing some research on the company. And I wasn't really that good of an investor on those days, let's be honest. But I kept investing, and every earnings call and every earnings results were like much better than expected. They were always increasing guidance. But I was like, as I was learning more about valuation, I understood that it was the IPO, let's call it, was really overvalued. If you were based yourself on the guidance from the company, because on the specs they would always have to give like a 2 or 3 years targets, let's say, and IMS targets were like 200 and something $1 million in revenue in the next three years, like 2022 or 2021, something like that. And then they ended up doing more than the double. But if you base yourself on those estimates, you would say that it was very, very overvalued. So I just put it like on standby, let's say. But when it was in the single digits, I was like, I mean, I should really take this stock more serious, because they always crush in every earnings report. So I kept doing it. And when it was in the low single digits, I was like, I need to get in. And I got in at like, I think I finished building my position at like $8 per share, more or less. But then, I mean, I just got excited and I kept averaging up, and I'm at like $10, 10.7 cents. And I mean, it was the execution that got me in. Essentially, I love the business model, and I love. We can touch on that later, but it was the execution that grabbed me so fast, and it's a beast. I mean, you just have to look at the numbers.
Yeah.
And regarding the allocation, sorry, right now, because of also the stock's price going up, it should be at 30%, more or less now.
30% of your portfolio is in hymns.
Yeah, because I'm a very concentrated investor, let's say. For those of you that follow me, they know that I essentially cover 3 companies, and HIMS is my second largest position. So yeah.
What are the other ones?
Yeah, what are the other ones?
The first one is iType, ticker symbol HITI, and the other one is Rocket Lab.
Tevis and I have a mutual friend that's a big Rocket Lab proponent. So congratulations on those gains. I don't know the other ones. So, but yeah, I favor concentration as well. Tevis likes to own a piece of everything instead, but he's got big pockets, so that's okay for him.
No, I mean, for me, like Hims is it's a company that I want to be building out larger. I'm still learning about it right now. I think right now it's about, let me just check for you, but it's about 6% of my portfolio. Granted, I've just started building it out a couple weeks ago. The rest of my portfolio is 30% Tesla, 18% SoFi, 13% Bitcoin. So it's fairly concentrated into like 5 or 6 positions. And then, the rest of the portfolio is just like 50 other fucking names. So there's some that definitely move it on certain days.
Maybe Will, you want to go
Yeah,
ahead?
I was giving you a chance. So what I wanted to do is actually I want to share my screen and show the numbers. What I was going to do here. Watch this. Okay, so there we go. Okay, so get this. Can you see my screen?
Yeah, you go.
Okay, so when I entered 20, or when I started looking at Hims, I was kind of in this kind of like January 2022 time frame. Let me throw the price graph on here too. So I started checking out Hims around this like $7 area. I started learning about it on the de-SPACing time frame. And then sure enough, it got to be around this time where I actually looked at Hims. I was like, this is a crazy risk reward. But if you look at the cash from operations, it was negative around that time, like negative 40 million. So like I wasn't very certain in the long-term dynamics of the company. At that point, they had only launched a few products. It was like ED and hair loss, basically at that point exclusively. And so I wasn't super sold on it. I was like, this is kind of janky. And that was back when everything was falling apart in 2022. So I bought about 100 shares at $5, $5.50. So this is on a logarithmic graph. So put it on linear. So it was around right here-ish, back when it was pretty negative cash from operations. I sold this around $7, thinking that I was really, really smart. So I sold for about a 40% gain pretty quickly and then missed the next $9 up. And so I started watching it. It went up again. And at this point, it was when I was like, oh, I might have misjudged this a little bit. We're starting to get pretty cash flow positive. Didn't dip on this 6, or it didn't do anything on this 6. I was buying other stuff around this time frame. And then pretty much around this dip right here, when it started running on the GLP-1 news, I realized, after I looked back and reviewed again after assessing, I'm like, dang, the entire financial profile has shown a lot of operating leverage. I looked at what was driving that, which is primarily the marketing budget getting operating leverage on it, and obviously we've all seen the ads for Hims and Hers, and so I realized they've kind of blanketed the internet full of ads already. And since all those are very scalable, I assumed operating leverage was going to continue growing. And this is obviously the gross profit right here. So you can see gross profits going up quite rapidly. So I entered around this, I started dollar cost averaging around $20 and then pretty much was buying around this entire U right here after kind of realizing when I missed it on this initial run that I'd missed it. But luckily with this one, this is the most drama-filled stock I've ever followed, and so I knew that we'd get another entry. So I've already paused my buying at this point too for the stock. I think I bought, I think today when it was down 4.5% on the lows is my last buy, and I'm probably going to leave it at that. But that's kind of been my fault. That's kind of been how I came looking at Hims and Hers. This is probably one of the ideal companies that I look for, because to Manuel's point, the growth is very consistent. If you look at quarter over quarter, the trailing 12 months revenue just always looks very good. This is quarterly revenues, and you can see it. There's just a stair step in performance every quarter, and this is largely just due to building out the distribution of existing and new products. I mean, and so it's a very scalable business, and that's primarily what I look for. Is I want something that's going to get better as time goes on. And what's cool about this is if you already look at like this company's return on assets per quarter, it's already averaging 6% return on assets. And when you compare that to other pharmaceutical companies like that are mature, like Johnson & Johnson, you're getting like 9%. And a large of like why this is comes from the qualitative research that we all had to do. But yeah, very, very attractive premise, let's say. And therefore it shows up in the numbers very obviously.
Yeah, and that subscription revenue, that's the golden goose. That's one of the reasons why it's just as predictable as that, especially when it's sticky like Hims is. So that I found very, very compelling when I was researching this a couple months ago. So,
and it's kind of curious because in the beginning when IMS came public, the investment thesis wasn't really like what it is today. On that time, it was really like they were also selling a lot of wholesale products like shampoos, like creams, like a lot of stuff in Target, in pharmacies like Walgreens, I guess. And like for instance, I remember when they announced that they were going to enter like 2,000 new targets or Targets and Walgreens or something like that, and everyone was like, oh my god, so bullish, so bullish. And now it's really none of that basically. And also if you look like the first presentation, like the spec presentation, and probably the 2 and 3 after that one, it's all about, not all about, but it focuses a lot on primary care as well. And a lot of people don't know that IMS doesn't provide primary care anymore because it wasn't that good for margins. As like a lot of people I saw even on X, like new content creators about HIMS, like using a lot of slides from like the first presentations with primary care there and primary care in the total addressable market. And it's something that should be said, that they're not in primary care anymore, and that's good. And since they left primary care, like I think it was in late 2022 or late 2021, it really helped the bottom line margins. So HIMS, at least I see it as an evolving story, and it's now it's GLP-1s, but like a year ago everyone was waiting for the oral weight loss. When the oral weight loss solution was launched, everyone got crazy, but not in the GLP-1 proportion, let's say. But it's kind of curious to see that HIMS is, it's very difficult to really understand HIMS, or it may be easy, but it's difficult when you see so much people talking about it, and a lot of people are not saying like what should be said about it.
Yeah, and I'm like, that's a thing though. So for context, Roy and I are part of another weekly podcast on SoFi, which is a stock that we're both into. And what I've found with that, we've done that for about 2 years now, over 2 years, and the story just keeps evolving. And there's layers upon layers upon layers of these companies as you dig deeper into them. And I think that's ultimately one of the motivations for having medium like this, where you sort of just cover it on a weekly basis. It allows you to dive so deep into some of these topics, because GLP-1s right now, I'm finding, are a massive mover of how the market perceives this company. Like if Eli Lilly does something, or if something happens, with regards to the GLP-1 space, it totally overshadows all the other industries or verticals or product offerings that HIMS provides right now, because the market perception is that HIMS is at this current valuation because of GLP-1s, and the addressable market for HIMS is essentially a perfect overlap with the addressable market for GLP-1s. And that's part of the story, but I don't think that's a full story for investors in HIMS, especially those who have been in the stock before the GLP-1 narrative. And I think it's important to cover that and just talk about the DNA of the company at a deeper level, to say, okay, well, this is a company, at least for me, I have a product background. I'm a product guy. I focus, on their discipline with regards to rolling out products. And one of the things that I really like is their consistency by which they're rolling out these products. Every quarter there's some type of new offering, there's some type of new vertical, and that's what's sustaining their growth rate so far. And so for GLP-1s, and I mean, we can dive into some of the news that we've seen over the past couple of weeks. It's part of the story. It's not the full story.
Absolutely.
Yeah. Or I'll actually take a little. I mean, we can dive into those if you want. I actually think that the more interesting part of the story is actually the fact that Hims is largely product agnostic, if that makes sense. Like the best thing that Hims can do is simply become a platform for generic drug distribution, and a large portion of that is simply due to the fact that they're eliminating so many parts of the current value chain that are non-value adding for them for the healthcare model. And so like that's the part that I'm coming up or that's the part that I largely go back to. I think that the discussion on all the products kind of blinds people from the fact that this is simply a new distribution method for these pharmaceutical drugs, in the way that like Amazon just started in books. So imagine if people were sitting there talking about if Amazon got the copyright issue to the new Harry Potter books, for instance. Like that's arbitrary in a way. The thing that we need to consider though is obviously systematically can Hims continue to build out their generic product distribution, but in reality, the only thing that we need to figure that's largely what we need to figure out, and then will that sell to customers essentially when because I think the third party physicians that Hims utilizes as their partners, I'm not sure what their legal or I don't know what partnership they have with Hims offering exclusively Hims pharmaceuticals. I don't know what that arrangement looks like, but I would imagine that largely it's simply making sure that Hims can continue building out their products, but largely the products themselves are not important, assuming that Hims can continue building out their products over largely, because eventually you get to a point where you can buy IP. Like you can go the Netflix route and you can start creating your own IP. You can build out your own products. However, to that point, you just need to keep building out the products and reach a certain point where that becomes a viable option. Or Spotify.
So I'll share my Hims journey to a relatively recent 3.5 weeks in Hims. Maybe spent 4 weeks before that, which is short for me, looking into this company. And when I was looking into it, it was I had Tevis here screaming and saying, "You got to buy this stock," and then another friend saying, "You got to buy this stock," and he's been doing that for a while. And I wasn't interested. Manuel, when you said TDoc, like that rang some bells for me. I briefly invested in TDoc, and Live On Go was one of those too, and just poorly managed. And I lost like 15 or 20%, and thesis was broken. I was done. So I got out like way above where the price is, thankfully now. And because of that, like this whole telehealth industry, I was like, any company that I'm just not interested in, because I mean, you get burnt, you get skittish. So finally, with these two guys screaming in my ear, I said, fine, I'll take a look. I was very impressed. Like I knew some things about Hims just because, of Tevis and because of Chris, and some other people posting on X. But ultimately, when I was looking at it, I was really reminded of the company Robinhood, even though they completely different industries, but the way that they're run, very good at launching products, very mindful of capital usage, capital allocation. They tend to be able to do that very effectively. They have a very grand vision. They seem to be leaders and execute incredibly well in this field. They don't have debt, and they actually have changed. They're growing rapidly, but they switched to full profitability. And so with those, I'm like, okay, I got to do some due diligence. And so I did over the last, probably 3 weeks after that, when I finally said, you know what, there's not going to be a perfect price for this company, but I want to be in this long term. And so I started buying weekly from that point. And I like what I see. Look forward to, this will be my first earnings call that I listened to live. I, paid attention to the previous one, looked at some from ones earlier than that. But it's exciting for me. It's all new. Oh, and it's about 4.5% of my portfolio, which for me, I'll probably get it up to 5, maybe 5.5. I'm willing to go up as high as 10%, but I don't go for this level of due diligence that I've done. I don't go above 5% much, other than just to round out some things until I really have that level of conviction in the company. I think Hims is going to be really solid, but there's things that I'm like wrong on that I'm learning about every single week, if not every single day. So I enjoy learning from you guys.
I found it interesting how Will, was like, hey, the main moat here is the platform. And I mean, correct, I'm trying to paraphrase, so correct me if I'm wrong, but that's really interesting to me, right? Because for me, if I'm thinking about what is the moat, I'm thinking about that subscription, direct consumer, like the delivery mechanism as number one. And then number two, this idea that they have these the custom solutions in terms of controlling the form factor. Like when you pair those two things together, you get a really catered value proposition that's personalized to users. That's disrupting this generic experience of going into a pharmacy and getting something in whatever form factor they provide, and then pair that with, so number one, delivery mechanism, number two, form factor, number three of the bull case is really the fact that they can collect a lot of data around who they want to personalize solutions towards. And so they do have that telehealth aspect without making that their entire company, right? It's a mixture of that hardware and software. And I think that data is going to be really valuable. Those three are like the main theses of why I'm personally in HIMS. I'm curious maybe to just go around. I know, Will, you said around the platform, but if there's anything else that you add, like what makes HIMS special, like to allocate such a big percentage in your portfolio?
I mean, there's the qualitative aspects about to your point about building the platform. You've got, but again, a lot of the things that you just mentioned are very good scalable dynamics. If you kind of chew down each one of those concepts, the first one being you said the subscriber base with the recurring revenue. That's always nice. This is a higher dollar, but this is a higher dollar item. One, it's a little bit more one-time use than Netflix, for instance. So you're gonna have higher churn than Netflix, which you do. But this also is more akin to like, it's kind of a quasi Netflix kind of Amazon style thing where you're paying for a membership, but it's upon the duration and and upon when you need the condition, like very similar to like an Amazon buying an item on the platform. So I think it's and so with a platform style like that, to your point, more customization is more options. So since HIMS is a centralized platform across domestically and eventually internationally, since they've already got UK and Canada operations up and running, you're very likely that the subscriber base is going to continue growing because the ad strategy with the direct clicks that HIMS has, you can scale that across the globe and you can continue increasing the density. And like you're starting to get word of mouth. And I know that HIMS has a chart on their investor relations where they get 54% of new telehealth subscribers. That's a platform dynamic. Usually the first mover ends up getting a centralized economic advantage on user acquisition. And so it's one of those where, assuming that HIMS can keep building out the products, this business gets better and better. And so it kind of fits my qualitative idea of, does this business scale? Is going forward, is it going to be a better business than it is today? That was a yes. And so that needs to be a one with every business that I invest in. That concept needs to be a one. And then from there, quantitatively, it looks amazing. It's at 4.5 times gross profit today. Gross profit per share is growing faster than 97% of the S&P 500 companies. The revenue CAGR this year trailing is going to be 60+%. So it's growing revenues quite rapidly. It's got a lot of white space to go. And with regular models, it doesn't take much more. If you get anywhere above 20% revenue CAGR on this, then you're going to do fantastically. And they're about to get 2 or 3 years of that revenue growth rate in the next year alone. So, and it's at 4.5 times gross profit when Snapchat is rated at 6 times gross profit. And that company has had zero value growth and on a per share level over the last 5 years. So the grade's good. I just think it's very attractively priced. And I think qualitatively, it's a story that I like. And I think that it's assuming they can continue adding subscribers, which I don't see why they can't, then it turns out to be a really good story. And that's it.
Manuel?
So I agree with everything Will said. One thing that he didn't mention, and it's something that I always loved about Andrew, is the customer-centric approach that IMS has from the beginning. They could already be profitable like in 2021 or 2022, but they always chose to keep investing in the business, keep investing in the customer experience. I mean, I'm not in the US. I'm from Portugal, as you know, so I cannot really try the app or see, like, ask some friends that used it or something like that. But from what I understood, the experience is really nice. And in the US, and Will mentioned this in his article about HIMS. I just read it this afternoon, so it's really fresh on my mind. The US healthcare system is, I mean, it's not good, as you know. And HIMS, you don't even have to. First, you don't have to have an insurance, and then you bypass all of those critical steps that you have to go under, to go through. Sorry, to get your treatment. And with HIMS, I mean, you have a prescription in like 24 hours. And it's from a third-party provider, despite what many people say. Oh, like the bears are always saying that IMS just prints prescriptions to everyone. It's not like that. It has to be a third party prescriber. Sorry. And Andrew Durham, the CEO, has always had in mind that he had to take a long-term vision for the company, and he reiterated that like in the last interview. It was very much focused on GLP-1s, but he touched a bit on the marketing side, because when IMS was at the low single digits, the bears were first, there were no GLP-1s, so the bear case was not like the one it is right now. Like, the GLP-1s will kill them. Eli Lilly and Novo Nordisk will sue them until the end. The bear case was like, oh, they will never turn a profit with those super high marketing expenses. It's impossible. It's a shit co and all that nonsense. And they literally had like slides saying we're spending a lot in marketing, but it's paying off. And I mean, you could see in the numbers. And they're still investing a lot in marketing. And Andrew said that they will keep investing. And if you look at, for instance, L'Oreal or companies like that, they invest essentially the same thing IMS invests in marketing. And of course, they can turn profits. It's all about scaling the business, as Will said. And IMS, as a capital light business, especially in the healthcare industry, it's super capital light and super easy to scale. They're at like 2 million subscribers right now. They can go to tens of millions. And this is also a risk we can touch later about the compounding rules and all that stuff, because compounding supposedly isn't supposed to be for mass produce, like for companies that produce in large quantities. But essentially, that's what I always loved about the leadership. And it's a common thing in these three holdings I told you, the being founder led, and the founder always having in mind the long-term trajectory of the company. Because as I said, Andrew could make IMS profitable in like 2 years ago, and pocket out, and he could be already very rich. He just had a kid, and his wife is pregnant again, so he could just be enjoying his life. But I really think he has a vision, and that's why I believe he really will be able to scale it to tens of millions of customers, as he always said he wants to. So apart from what Will said, I'm not going to talk about it. I really think that the mindset and the fact that it's so capex light business, it's essentially what will drive this company to millions and millions of customers.
But I mean, you did touch on an interesting piece there with regards to marketing expense, and Sagi also asked here, that is their highest expense line item. It's sales and marketing. It's higher than R&D. It's higher than G&A. Like, it is their highest line item. And that was something that, I guess, at first glance, as I was looking at this company, it struck me as unusual, because always in the back of your mind, the fear is going to be that, okay, this is just a cool branding and a cool, marketing campaign with no real product innovation behind them. Like at the very first glance. And if you're thinking about, well, if scale is their number one concern, then why would they even turn profitable right now? Why don't plow more into sales and marketing? Or how does that really translate to the amount of members that they sign on, or the subscribers that they sign on? Maybe we can talk about that for just a second. Like sales and marketing as their biggest expense line item, as a bear case for HIMS in terms of, okay, well, is this company, like, how effective is their sales and marketing? How much does it actually translate to their growth rate and their, how much of a leading indicator is it to their revenue and also their members?
So I actually did an analysis on this a little bit back. Go figure. Right? I was an engineer, so I always run the numbers first. But yeah, Koifin, as you guys saw, gave the quarterly numbers. So what I wanted to do was I wanted to measure the effectiveness of growing a platform based on gross profit growth via the investments in working capital, capex, and marketing, sales. Between the three of those, I wanted to get a rough estimate on. You're basically going to be able to grow a platform business, style business via having the most infrastructure or the most users, or having the most working capital for the most goods. And so between the three of those kind of your main investments. So I ran the analysis with Amazon, Netflix, and Hims and Hers to see what the results are, because I figured those were two of the best platform businesses of the last 2 decades. Might as well look into them. Hims and Hers only came out at a 4% lower return on invested capital the last few years. As a percentage of what creates gross profit growth, it was at like a 19% return, whereas like Amazon and Netflix are both at like 23 and 24-ish. But what was the interesting part is the fact that the marketing budget is 40% of revenues. And so if you looked at the percentage of gross profit that you could reinvest, Hims and Hers can invest a lot more capital at slightly lower rates of return. And that's kind of their marketing budget, is the fact that all of that marketing budget has really good rates of return on it, comparative to like even the original platforms could not have spent has highly accredited expenditure as Hims and Hers has had on its marketing. It's been very efficient. And so I think a lot of people about that will say is they're like, well, the return on capitals are low, but that's based on the bottom line, like we've been saying, whereas the marketing budget is being utilized to create more gross profit to invest in more marketing. And the marketing budget is still scaling well, but that's also because they're on centralized campaigns that are all technology based, so they're going to get cheaper as you get larger in that case. So all in all, it's a great marketing it's a great marketing team. They've got good strategies, and it's producing great returns on capital.
Yeah, I mean, it's what I always said when this was the bear case. It's like the numbers speak for themselves. How were people like crazy about marketing expenses? I mean, I really couldn't understand, and I'm glad I didn't, because otherwise I wouldn't have bought it so cheap.
Yeah, with marketing expense, there's two things that they avoided, which I really liked. One is sometimes you get in this constant loop. You're not profitable, and so you really need to grow your revenue to grow into profitability. So you accelerate your marketing expenses, which helps grow your revenue, but it also costs you money, and so you're not profitable. You're just always trying to play catch up. Some companies never get out of that cycle. Hims has. They're profitable. They're in the S&P 600, which we'll probably talk about in a little bit. They would not be otherwise. And usually that doesn't happen, in 3 quarters. It's kind of a unicorn in that way. And the other is that since they are profitable, this marketing is a controllable expense, right? So if they start seeing a little bit less impact as far as their marketing, I mean, they can always tweak things. But if they want to, they can pull that back. Now, some of the marketing contracts, I'm sure they have, that they can't just pull back on like in one day necessarily without some sort of penalty. But, if they get to a point where they're like, hey, revenue, just because of word of mouth and everything is just piling in, we don't need to spend quite this much in marketing. They can flip that switch if they want to. Now, I do think right now, especially coming up with the new year, and I'm curious about your guys' thoughts with this. I know with gyms and exercise and fitness here, at least in the United States, January 1st is when people are really, really focused on bettering themselves, and those New Year's resolutions, and weight loss is almost always the number one national goal of people. We actually have a product now that helps people lose weight. And of course, now here in the United States, I believe it's 1 in 8 have used GLP-1 products. That doesn't mean they are using it actively right now. Some, just because it's prohibitive for its expense, or they're running into insurance issues and they don't realize there's alternatives yet, like Hims. I think that Hims has a great opportunity, especially as they market towards that demographic entering January. And so I'm curious if you think that there will be a seasonal boost in January with the weight loss products and maybe hair loss and others in particular, or if I'm just reading too much into that and that's nonsense.
So first, regarding that the parts you said that Hims could take back some of the marketing expenses to improve bottom line. I think it's not as easy as it sounds because of the churn, as Will said. Here, this sector has a considerable churn. So they have one of the reasons why they have to invest so heavily in marketing is to not only to capture more subscribers and to increase the number of subscribers quarter over quarter, but also to offset the subscribers that they lost. Because it's impossible not to lose a considerable amount of subscribers every quarter. But it's obviously they don't need to have that high of a percentage spent in marketing. And as they grow and as the brand awareness grows, as you said, the word of mouth, obviously they can do it. Regarding the seasonal aspects, I think we will see it not because of that, but because of GLP-1s now are only now starting to be available in all the states across the US. When IMS launched GLP-1s, it was only available, I think, in 20 states or so. They're releasing like slowly every month or every week new states. So whatever happens about the New Year's resolutions or whatever, I think we will see a huge boost in GLP-1s logically in the third quarter, but I think it will even be higher in the fourth quarter. And then the first quarter, maybe, and I hope so. But I think Hims, as the chart Will showed, they're a beast. They're always growing each quarter. So I'm not expecting a seasonal boost because of that, but it would be highly appreciated.
Yeah, I was just thinking that might be a possibility, but I appreciate your insights.
It can always be. It can always be.
But yeah, that's actually something I forgot, is that not every state has had, and there's still a few states, that are lingering, but it's not too far away from, it's the majority of the states at this point, whereas a year ago, that was not the case at all. So the TAM has expanded as a result of this. So
yeah, I think in the last earnings call, Andrew said that they would close the number of states, like to get to all states until the end of the year. So
we'd be remiss to say that the GLP-1 revenue is probably going to go away at some point next year, though. So it is going to be like a one-time sugar boost. In 2025, we're going to have a super annoying time lapping this. And honestly, if anyone's listening to this stream, anyone at all, just wait for that position to buy, and then as soon as it happens, buy everything that you can. But it's going to happen. This time next year, when this shortage ends on GLP-1s, it is going to be a boost. There is going to be it is going to be a hit to revenue growth. But I think as long as the company's other mature offerings continue growing, I don't think it'll be an issue, but like an actually material issue. But I think that'll be a stock price issue for a little bit there.
So when you say that, I find that interesting because the shortage is going to end, supply is going to meet demand, and it's going to stabilize. But that revenue, like it's a recurring thing, right? Like that revenue is not necessarily going to go away. It's just the rate of growth from a comparables perspective is going to be a hit. Am I getting that wrong?
Yeah. So the GLP-1s, as Hims and Hers are selling them right now, are simply a compounded generic form via utilizing semaglutide of Ozempic. And so these things, and so Hims and Hers, after the FDA clears the shortages, is going to have to quit compounding exact replicas of IP. And so the Ozempic is IP, and utilizing a compounded version via semaglutide, they are going to have to quit doing that. So but Hims and Hers has already started building out other weight loss products. And if Hims and Hers can prove that the customization via another medium dosage size or personalization, whether it be a combination with another drug, are required, then they're able to sell it and compound it. So they've started building out their weight loss product offering, but their GLP-1s, they are going to have to quit selling after. And so that right there is the big misconception. And so a lot of people will sit there and say that's a bear case, because then that means that Hims and Hers is going to like always. But again, this is why you have to focus on the distribution vehicle. But this is going to happen. Whereas like Hims and Hers, all that revenue growth that they're going to get out of the GLP-1s, they are going to lose. That is to not be able to not disclaim that is intellectually dishonest.
Yeah, and I think part of the re-rating that the stock will have, it's because it will never be able to grow 60% per year like it will grow this year, or like even next year it will be very hard. Maybe some people say the shortage will last until the last quarter of 2025, and then after the shortage ends, they can still sell it for 60 days, I guess, if I'm not mistaken. I think it depends on the size of the compounder, but IMS should be like one of the largest compounders, I would say. So I agree with that. The stock will probably crash. Like when semaglutide goes off shortage, I'm really afraid that the stock can like crash for like 30-40%. I mean, but if it's at $40 or $50 on that time, it should crash only to today's prices.
So,
but if we get a minus 10%
there's probably multiple. I think realistically, pre GLP-1s around right here, the stock is traded around 4.5 gross profit. I think if you're buying around there, you'll be fine regardless. There's going to be a massive uptick, obviously, in gross profit over the next few months. So I would just keep track, if I were looking into the name, on what percentage is going to be those GLP-1s or what percentage is weight loss. Cut that off of the gross profit moving forward, normalize the multiple to about 4.5, and then that's your downside case.
Did they break that out in the SEC filings? I don't remember seeing that.
No, yeah, they don't break it down. That's the main problem. And also with GLP-1s, everyone thought it would have higher gross margins, but it's not really the case. It's the case with the oral weight loss. The oral weight loss, it's probably the product. I mean, don't take this as granted, but the oral weight loss, I think it should be the product with higher margins of the entire portfolio of Hims. But GLP-1s, probably the one with lower margins, because you have to chip them in cooling stuff and all that. So it's still very, very high margins, should be at like 70% gross margins. But Hims right now is at a consolidated margin of 80. So that's also one of the reasons why the stock fell after the earnings report. But yeah, I mean, without GLP-1s next year it should be at least I'm expecting like half of the year with GLP-1s. But as soon as GLP-1s disappear, the revenue growth will inevitably slow down, and people will start to get crazy. Oh my God, Hims will die, and just like we say we see it on X.
So okay, let's keep this stock reaction aside. I'm just curious to learn, because this is I didn't think that this was going away entirely. What?
Oh, you didn't know this? Oh, yeah.
No. Like I
Sorry to
said,
push
we're
you.
only a couple weeks into this, right?
I didn't know it either. So yeah.
I mean, the Andrew Dunham in the last call said that they want to keep selling GLP-1s after the shortage ends, and
So
that's
yeah,
why.
you've also got to keep in mind that the board member that they added on recently, the reason why he was such a good ad and the stock price jumped immediately afterward was because he operates a generic compounding company essentially, and he worked for Novo Nordisk as an executive for a while. Basically, the team brought on somebody that could figure out how to get around the rule, but the problem is it's probably going to be a partial hit regardless for a large portion of the revenue. But I imagine that Hims and Hers is probably, this is why I brought up initially, as long as they can figure out how to keep increasing the amount of products that they're offering, they'll eventually be able to get to the point where they can buy their own IP. And then this doesn't become an issue again. And then that's a whole nother level of scale. And so the question is, can Hims get to that level of direct scale? And I think it's going to happen because, but the thing is about semaglutides and whatnot, it's all protein based. And so protein based, you need to use the injections. And that's but the things like menopause and testosterone that they're planning on their product roadmap don't have to be protein based, and that's perfect for Hims product offering. So Hims already has two really good hormone based, pretty much any hormone based product, Hims and Hers can do really well. And so we've got a pretty good product roadmap where weight loss, although it's the golden goose, isn't needed right now. There's still enough product offerings where it'll be okay. So hopefully we get those launches in 2025 to kind of dampen that effect. Who knows though? But in the grand scheme of things, yeah, it's about getting to that point where Hims and Hers can either develop its own art IP via R&D, or it just goes out and purchases its own directly and then centralizes the distribution across the nation or the world.
Do we have any insight, like on a market level, what the preference is between that injection versus that oral?
I don't think or Manuel, correct me if I'm wrong, is there any oral weight loss stuff?
Sorry, I didn't understand the question.
Does Hims and Hers offer oral weight loss products, orally taken weight loss products?
Yeah, they started with oral weight loss, with a oral weight loss solution. I think it was when they reported the fourth quarter or third quarter of last year, they launched a solution which is like $80 per month, and it's kind of
okay. So that Hims and Hers would continue to be, they would be able to continue selling that.
And exactly, that's one of the things that I'm always saying on X is like they got to the $100 million annual run rate in the weight loss segment just based on the oral solution. Because when GLP-1s were not here, like in the first quarter of this year, they jumped like 30% in one day, and it wasn't because of GLP-1s.
That's fair. Because I'm looking at to your point, I'm looking at an article. It says it expands its weight loss program. So whatever was there initially is still going to exist.
Exactly,
but
and
the GLP-1s are going to have to be cut. So
sure. But
it's like a
So even though GLP-1s are obviously a greater force, the weight loss, the oral weight loss solution was the best performing ever the company had. So
right. It was like the fastest to 100 million or something, right?
Exactly. It took like 7 or 8 months to reach to $100 million annual run rate. And usually it takes like 18 to 24 months to reach to 100,000 subscribers, I guess. They said that in the last shareholders letter. Mm-hmm. And weight loss, if you exclude GLP-1s, was like in 7. So it's really not just about GLP-1s. And if you go to, I every weekend, I go to the Reddit forum about Hers weight loss. There's also the Hims weight loss, but Hers has a bit more feedbacks. And there are a ton of people taking the oral solution, I guess. And I've seen like people, like experts in the industry, saying that its oral solution is not really a big thing. but it's, as Will said, it's very about the way they distribute it and the way they communicate with the customers. Because the solution is essentially, from what I understood, it's like you receive a package in your home, and you have like basically a psychologist 24/7, like trying to go deep in your eating disorder. Because if Andrew always say, if you have a weight problem, it's probably something that's on the root of that, a problem on the root of that. You have an eating disorder, you have something bad about your mental health that you have to treat, or something like that. People just don't born. I mean, you can born with a condition that puts you with a more tendency to have weight above average weight, but there must be always the root of the problem. And they try to like talk with the people, and like they give you essentially pills that try to, it's like GLP-1s, because my mother takes GLP-1s here in Portugal, and essentially what it does is it just stops you from wanting to hit. And like the oral solution does it in the same way, but obviously not as effective as GLP-1s. But it's very much also about the side effects, because with GLP-1s you don't want to eat anything, because you just have like a stomach ache, or you're just feeling very bad that you don't even want to eat. So I think, at least if I had to to choose something, but also I'm a bit afraid of needles, but I would definitely go for an oral solution, even if I had to take like a bit more time to lose the weight I want. And I think that even though probably most people will prefer the GLP-1 solution, I think there's like a huge market to explore with the oral one. And if you go back to IMS reports before GLP-1, you can see that the oral solution was really picking up. And as I said, if you go to the Reddit forum, you see like a ton of feedbacks with regarding the oral solution. And I even saw like a few people saying that GLP-1s were not working out for them, and they tried the oral solution, and the oral solution worked out for them. So it's really about each person, each person's needs. And that's also one of the things that IMS focus the most, like the personalization. I don't think that the AI system is something big. I think it's something more like of, like, you feel that you're having a personalized treatment, and the side effects are being mitigated. And I don't really believe that they're doing something unique in that sense. But with regards to weight loss, a lot of people just simply don't know that they have an oral weight loss solution, which was doing incredibly well and is doing incredibly well. And you just have to go to Reddit and see, like, every day there's a ton of new reviews, and not only about GLP-1s, as I said. So yes, the stock right now is pegged to GLP-1 news and to everything about weight loss. But IMS is not, as Will said, IMS is not only about weight loss, but even the weight loss segment is not about GLP-1s. Like last quarter, they had like 4 or 5 or 6% revenue of GLP-1s, but the oral solution, they didn't report it. But if it's at already a $100 million annual run rate, and it's been like at that time like 7 months, I guess. So it should be a considerable percentage of revenue right now, maybe even high teens or something. So that should be the focus. And I think there's a huge market for people that want to lose weight, but they don't want to inject themselves. So yeah.
Yeah, oral is a preferred medium. Like there's probably some weird people out there that like love to be shot. But that's usually like if that's your only choice, and it used to be testosterone, I believe, was only through shots, and now it's offered orally, which is immensely popular. And the companies that were first to that, like they benefited immensely. So yeah, if Hims continues to perform well with their weight loss product, which can be heavy, well, and also there's a heavy customization too. It's like depending on how you prefer to consume that orally, and Hims really benefits from that. So. Oh, and the other thing I was going to say, you mentioned the website. That was part of my research, and I've gone on the website a couple of times since then too. I think it was Saturday. I was looking at the weight loss stuff. So I was like, okay, I'm not signing up for anything, but let me go all the way through up to the point where I want to stop. And I'm trying to do it in a way so I'm not getting all the ads now of like, oh, you need to fix your hair. And like, no, I'm good there. Weight loss, probably could use that, to be honest. But no, the website, the AI, it doesn't feel like talking to a real person, but it does a really good job of asking and isolating those questions and trying to identify underlying issues of like how much are you trying to lose, what kind of time frame, what is the root cause basically of you eating? Is it stress? Is it you see it as a reward for yourself? Sleep is one of those big factors, and then they have things in there as they're going through. They're like, and by the way, you may not know this, but if you increase your sleep, to this average amount, then it can impact your weight. And so just, it seems like they're actually trying to treat the person instead of just sell them a product and make the person a product, which I liked when I was initially checking it out, because I was like, I mean, that's the reputation of this industry, is they want to hook you on something for the rest of your life, and they don't really care whether you get better or not. They just want your money. And I mean, Hims needs to make money, but there's enough of a target audience out there with the obesity epidemic, and that's just one of the products that they have, are coupled with the GLP-1 and the oral. So yeah, I like what they're doing. They're approaching that in a healthy way.
It's also nice that if they do poorly, they get bad reviews, and they're going to be forced to improve their service. Whereas, like, I don't think if anyone gives a hospital a bad review, I don't think it turns two heads. I don't think anybody cares. It's like that's expected.
Yeah,
So
it's kind of interesting because there's so many different platforms where you see the reviews, and some of them are like really negative and low. And I had somebody ask, is like, well, if Hims is so good, why does it have such poor reviews? And I'm looking like, okay, really good reviews, really good reviews. Ah, there it is, really poor reviews. I don't remember what site it was, but I don't know what's up with that. I'm too new, but it doesn't. The products, as good as they are, they don't work for everybody. And the thing is, like weight loss or hair regrowth, it's usually not just one factor. There's a multitude. And so if I took GLP-1, which I'm not, but if I did, but then I insisted on eating 4,000 calories a day, I'm not going to lose weight. It's not magic.
true.
Exactly. Like that's what GLP-1s make. Like you just don't want to hit, and or like even the oral solution, as I was saying, they just make you lose weight by not hitting properly, which is not healthy at all. But I mean, it's what people want. And just taking, because I forgot to mention this about the testosterone and menopause treatments that Will mentioned. I think IMS is kind of saving that for when GLP-1s like start going away, to try to offset a bit the problems they will have in the revenue growth, because they just acquired the 503B compounding pharmacy, and that's exactly what they needed to enter those segments. And Andrew has said many times that he wants to enter that segment, but is now trying to focus, let's say, on growing the earth side of the business, which he believes will be like much higher, much like larger in terms of revenue than Hims, which is curious. It's kind of a bit not really the same, but a bit of the Amazon story. They started with books, and then books were just a small part of revenue, and now it's Earth surpassing Hims. But yeah, essentially, I think they're like taking its time for like saving testosterone and menopause treatments for later. And they also did this with weight loss. I remember, like, for a long time, every analyst was like asking him during the earnings call, like, oh, don't you have anything about weight loss coming soon? And Andrew was always like, yes, we have, but we don't want to like just throw something in the market that doesn't have quality, and we want to do it at the right time. So I think it's something that they do very well, is to know when to do each step, and to also to manage the expectations. And that's also why we always say that they execute like a beast, because they every quarter they increase the guidance, they beat their own guidance. I mean, if they didn't know how to manage the expectations, we wouldn't be talking like this about the company. And I mean, but this is just, take this with a grain of salt, obviously. I mean, this is just my opinion about the testosterone and menopause approach. But if they're really doing this, I think it's very smart. Because I mean, you could grow now, instead of 60%, you could be growing at 70 or 80%. But I think it wouldn't really make that difference as it would when GLP-1 is like vanish, and you're maybe hymns will suffer a bit in terms of like growing in the low digits, low single digits, or even high teens, which is not normal for the company. And if they just push with new alternatives and new categories, it might offset and like make people forget about this, let's say.
I know we're at the hour. Shall we wrap there for episode 1 and then see where we stand for next week? And I mean, look, if we're planning a long podcast, we're going to have a lot of time to talk about all these things. I have a million questions for you, gentlemen. And there's a lot of like, this is one company where I'm finding every single day there's news, and every single day it's either up 10% or down 10%, which makes it interesting for me to hold. So I think we wrap there. And everybody at 75 people or so that are here, thank you so much for watching live, and join next week where we're going to talk more about this company. And let me know, if you have questions, and follow all the gentlemen on Twitter, and just let us know what you should talk about next. Everybody, thanks so much for being here.
I'll make sure to put my Twitter tag next time.
That's a good idea. All right. I'm signing off. Thanks, everybody.
Thank you.